Great. Thanks. Thanks everyone for attending. Pretty interesting topic, considering a lot of the changes in the industry. I'd like to introduce my panel colleagues. Niji Sabharwal, he's the CEO and founder of AgentSync, and David Duel, CEO and founder of EasyHealth. Why don't we start off by saying a little bit about your company? We'll start with David.
Great. So I'm the CEO of EasyHealth. We started 2 years ago with the vision in mind of building an end-to-end Medicare platform, and what that meant for us was starting with the tech-enabled distribution and actually going all the way and providing clinical services by helping health plans and payers onboard folks by delivering virtual and in-home health assessments. And kind of through our 2-year journey, we've employed over 300 people and had a lot of learnings, and happy to share today.
Great. Thank you, David. Niji?
Yeah. I'm Niji. I'm the co-founder and CEO of AgentSync. We do really a producer management and compliance platform for carriers, distributors, and MGAs. We started off as a compliance company, solved the very complex problem of getting producers onboarded across all 50 states with the kind of rat's nest of complexity to get those producers credentialed and ready to sell. And we've actually been growing into more of a kind of distribution management focused on the producer. It's been a really fun ride, very interesting space that has a huge potential to kind of remove that bottleneck to unlock distribution.
Great, thank you. And I'm Domenick, DiCicco, the CEO of Benefytt Technologies. Our company, for the purpose of this conference, we own Together Health, so we're an MA distributor. We also have a technology platform in the under 65 business. So today we're gonna tackle kind of four questions. The tipping point for online enrollment, and we'll go into that, and we'll define that a little further, whether it's assisted or unassisted. Tackle the question of, will producers continue to be the trusted advisors? And by that, we're talking about current trends, as well as, is there a point where AI takes over the process, and if so, when is that process? And then, of course, the kind of well-noted problem of churn in our industry. Tied to that, obviously, is retention. So we'll discuss that. And last but not least, we'll discuss the InsurTech valuations and trends in their valuations. And if we have time, subnote to that will be the public companies' current issues in the distributor marketplace. So it should be a fun conversation. We're looking forward to it. So a couple of data points here. Only about 40% of seniors are comfortable shopping online. Trends continue, and we'll talk about a little bit more where that's changing, and that's before we even get to enrollment. Another kind of issue in the space is how do seniors get access to all of the plans out there when they're on each broker site or distributor site. So question one, that's great, the clock's right there. When, if ever, will insurance be purchased completely online? David, why don't you take that first?
Yeah, I'm happy to start with that. Our thesis was that there would always be, at least for the next 10 years, the vast majority of enrollments done with an agent-assisted process, simply because it's just too complicated and it didn't cost more money to the consumer. So we tried unsuccessfully a few times for kind of full digital enrollments, and what we found is that even if they got fairly far down the funnel, there would still be significant drop-off. So just economically, it was pretty challenging, and the incentives aren't there to motivate a consumer to have a completely online transaction.
Do you think it will ever get to that, though, eventually?
I wouldn't bet a significant percentage within the next 10 years.
Got it. Niji, any comments on that?
Yeah, so, this is a big topic for us as we started to evaluate the viability for our business, and quickly found that, producers are not going anywhere anytime soon. If you look at the trends, the percentage of premium written through producers is not, on a decline. And it really comes down to, I think, we can all agree that certain types of products, like maybe travel and like renter's insurance for a one-bedroom apartment, make a lot of sense of a frictionless self-serve experience completely online. But when it comes to really complex, really personal products like Medicare, kind of health across the board, every consumer has almost like a price sensitivity threshold where above a certain price they're going to want to talk to a human, really an expert advisor to help them guide them through that process, really the pros and cons, and really the cost of ownership long term. And so I don't see that changing really anytime soon. Producers play an enormous role in that process.
I don't know if you noted, but eHealth in their last public notices said that their self-enrollments increased by about 40%, but they were not pure self-enrollments, they were assistant self-enrollments. Do you think, or assistant online enrollments, do you think that will accelerate that phenomena of assistant online enrollments?
Oh, absolutely. I think having an online presence as the front door and as a means to distribute content is going to be a really big piece of that equation, where it's the future, and we're already starting to move that direction, where it's going to be a tech-enabled producer experience where you get the best of both worlds. Autofilling forms, access to information, automated kind of step-by-step platforms to guide consumers through the buying process is going to be more important than ever. But when it comes to actually just, navigating the plethora of options out there, you really need a human being who understands the market, understands the products, and can truly partner with the member for the long term.
And I think that's the biggest challenge, is the complexity of choosing an MA plan, especially given the crazy amount out there. Some of the research kind of supports what these gentlemen are saying, in that insurance agents are still viewed as the trusted source for seniors. And again, just to give you a highlight of some of the numbers, 57 plans out there that include drug coverage, right? So, I'll ask this to the panel. Predictions on how the role of the producer will evolve in the next 10 years, because it has to evolve, right? So, David, why don't you start off with that?
Yeah, so at our company, we tried a lot of things on an agent and both on a post-sale experience to evolve the role by extending the agent's role in the post-enrollment process through care coordination, scheduling doctor's appointments, activating benefits, and helping consumers engage with the plans they choose. And what we found is that drove significant lifts in retention, like double, triple improvements in terms of rapid disenrollment. So I think over time, the agents will increasingly evolve to take a much more proactive role in both care connectivity, benefit activation, and things that help the consumers not just select a plan, but engage in their plan, and not just engage with the plan, but help connect them with providers and things that are relevant to their member journey.
So those touches are important, you're seeing, in retention impact. Mm-hmm. Yeah. What about getting paid for that as a producer? Is it just a value-added service, or you think that health plan should help monetize that?
Yeah, I think over time, you're starting to see plans offer some compensation for value-based activities. It's still nascent, but I think it's going to increase. I think there's a lot of compliance issues to sort out, and different tolerances from different organizations. But I think, there's just a great incentive for the producers on the retention side, but also there's a lot of benefits that are underutilized that health plans want members to utilize, and the benefit providers have a great economic incentive to work with producers to encourage members to activate a dental benefit, an OTC benefit, or other benefits that are available to them. So I think perhaps there could be an evolution on how producers could be compensated by different stakeholders.
And Niji, do you think the health plans will look towards producers to help with those issues of retention, utilization of the health plans, or do they think that's kind of within their purview?
Oh, absolutely. I totally agree with what David just said. I think the really interesting shift that we're going to see over the next even 10 years, a staggering statistic that I learned recently. The average age of an insurance agent is 62. That's not the top quartile or max age. That's the average. So it's roughly half above that age, half below. So we're going to see unprecedented cohorts of agents retire over the next few years here. And so that that bell curve is going to be really steep and kind of peak. And as those producers enter retirement and get rid of their books, the average age is going to slide down pretty dramatically. And then very similarly on the kind of consumer side, if you look at the 65 or the folks that are turning 65 by 2030, those are going to be the Gen X folks who experienced the dot-com boom in their 20s and 30s. Mm-hmm. So really, the technology adoption and reluctance that we've all seen on both the consumer side and the producer side to use technology and new tools to do their jobs more effectively, that's gonna shift very dramatically into hesitance into actually demanding these tools and these services. As we see this cohort age out, we're going to see fewer producers with the same amount of business, right? Same books of business out there. So they're going to have to do a lot more with, not really more with less, but just be a lot more efficient for how they think about running their book. And that means, great people enabled by great technology to deliver, just stellar customer experiences. And the only way producers are going to be able to move away from really the paper pushing and become like the stewards of the paper chase to, stewards of data and actually maximizing the amount of time they spend with customers using data and insights from the tools they're using to just be much more effective overall.
And just to add to that, I think kind of the companies like AgentSync and Sunfire were kind of a first wave of agent enablement technologies that are making things easier and removing friction. And I think there'll be a lot more agent enablement technology that touches on retention or other segments of kind of friction points that with maybe a newer generation of agents, you'll see increasing adoption.
Right, and you touched on another subject which we don't have listed here, but maybe if we have time, which is agent recruitment. But we'll see if we have time, maybe we'll tackle that. Yeah, it's an industry challenge, certainly. So and this is another data point where, customers, and you see this over and over again in the research, right? Customers view their agent as a trusted advisor, and I think that's the right approach to the industry, and I think you'll see the kind of agencies that are more successful going forward doing more with less, as was stated here, or different tools. That's going to have to become more and more. And so, the opportunity exists for agents to differentiate themselves by filling gaps in some of the Medicare onboarding, some of the services we talk to. So question 6, with retention rates on the decline, churn increasing, what can the producer and what is the role of the producer in helping combat this problem? David?
Yeah, to expand on kind of what I talked about earlier, I really think that retention, at least what the producer can control, aside from kind of the marketing that lands in their lap, is working with the consumers on their experience after plan selection. And it could be at the point of sale. It doesn't have to be call them back at a later time, but at that point of sale, they chose a plan because something drove them. What's been popular the last year has been dental coverage. The problem is people are switching plans for dental coverage that they already have, but they're just not using. So I think one of the biggest things is knowledge and awareness. So more tools to surface the availability of benefits, standardizing the data across different carriers' plans, and making it easy for an agent-enabled process for an agent to activate these different solutions. So just going back to where I think the greatest opportunity exists on retention, it's starting their clinical journey, making sure they get to their first doctor's appointment, making sure they schedule an annual wellness visit, scheduling them for finding an in-network dentist, a vision provider, or other benefits that are relevant to them. So I think the benefit activation landscape is in its absolute infancy as it relates to kind of where Medicare Advantage is. And I think a lot of innovation in the industry is going to come from a lot of these kind of benefits providers who only in the last couple of years have got heavily funded. So I think there's going to be a tremendous amount of innovation around producers driving engagement for various covered benefits that are going to incrementally lift retention.
Great, and you see technology having a kind of front and center view on improving that utilization of benefits and helping the agent kind of engage with the customer.
Yeah, I really believe so. I mean, we saw in ourselves, and we had built a retention platform for our own agents to use, and what we saw is, the difference could be, 60% rapid disenrollment or 90%, rapid disenrollment if they did their first annual wellness visit with a provider. And, is that a massive lift to accomplish? Not necessarily as a producer, but the producer has to know, who's the provider, how to schedule that visit, making it easy for that. The scheduling and the coordination is where I think there's going to be a lot of innovation.
So Niji, it's not really just one lever to pull to help retention, right? It's many kind of incremental changes that will help. What's your view on some of that? Maybe you've seen work or are coming out in the future.
Yeah, so we have a really interesting vantage point on the industry. We said kind of right in the middle of distribution between the distributors and the carriers, and kind of hear the needs and demands kind of and challenges really on both sides of the equation. And so I think to David's point, there's been, given the lifetime value of a member, looking back a couple years ago, incredibly lucrative business, and tons of cash started pouring into it to fund and really focus on distribution. Yeah. And what kind of broke a lot of those models recently, if you look at a lot of the public market valuations, is just cutting that pie thinner and thinner and thinner. And really the focus was solely on switching and getting folks at 65 and then switching. So that erodes that lifetime value really, really quickly. So, this industry is going to be challenged to do more, put a lot more of that innovation, that investment, not just on distribution, but, post-sale through the customer lifetime to, deliver the most value to their members as humanly possible. Yeah. And that's going to be, the make or break for who does, the winners and losers. Yeah.
Yeah, so you bring up an interesting point, which is, the kind of the increasing, I'll call it churn, that, has eroded, lifetime values. Do you see that trend continuing, and the trend specifically being the increase in churn? Or do you think everyone deploying some of the tools we discuss here as having a real impact? And does the impact happen now, or is it more of a longer game?
Yeah, so it's going to be a long game for sure. Kind of going back to my point on producers becoming stewards of data, that element is critically important, especially for carriers. If you think about the amount of data that's collected on members, on the sales, marketing, pre-sale, post-sale enrollment, add-on benefits later. There's very little data that's actually being tracked within platforms today, and this is incredibly valuable data that can drive just so much innovation in the space. And it's something that is just mission critical to carriers to really understand this customer behavior. And a lot of that stuff is literally just getting phone call with an agent. Nobody's really logging the data. It's getting dropped along the way. And by leveraging technology to really maximize the time they spend with customers, they can start collecting and harvesting and using that data to build better partnerships with their carriers and eventually better products for their consumers.
And I think you described kind of the transition of the producer from just make the sale to now they have to not only make the sale but support the customer throughout the journey in order to drive the right unit economics. David, what do you think about that trend of increased churn? Do you think it's going to continue? Do you think it leveled out?
It's tough. I don't see it going away. I think every week, I see another company popping up to compete in a massively growing space, and I think that's not going to slow down. But I believe there's going to be a lot of pressure on producers to differentiate through strategies that extend them beyond the arc of that enrollment. So it just goes back to my point that the producers can control that, and they can influence the duration that a member sticks around by making sure that they engage with their benefits. So there's things like PAPA that's already ancillary benefit for a lot of UHC plans, that you can have a pal come visit you and be a friend, and there's just dozens of benefits that are available to consumers that they just don't know. And the industry has known for a while that if you pair an MA plan with another type of insurance, that would lift retention in a meaningful way. And so stacking policies was kind of V1 of this, and now I think that helping them stack benefits, whether it's not find the plan, schedule their PCP, make sure they have scheduled to a dental, onboarded with their OTC, maybe it's a farm box, maybe it's a PAPA, maybe it's one of the dozens of other benefits. But I think that building a cocoon around a consumer of benefits and things they can leverage and support beyond the plan that's where there's a lot of juice left to squeeze, and it's where we're at the earliest innings, and it's because it's not easy. There's not a Connecture or a Sunfire for benefit activation. So I think that over time, more post-enrollment agent enablement technology will grow, and I think that's the solution versus kind of hoping that LTVs turn around in an increasingly competitive market that's not likely to slow down.
Yeah, good point. And I think kind of what you highlighted, which is it's really an industry problem. And the kind of the good or positive view of that is the industry is already trying to tackle it. And usually it's a partnership between producers and the health plans, which I think is the right approach. And I think that's how we're going to get there. Have you seen, more of the partnership approach from health plans with producers in trying to solve these issues? Or is it still a little bit too early?
I think it's becoming a much bigger topic overall, and really the model needs to change in a lot of ways, because in my entire career I've been kind of taught that it is way cheaper to acquire a customer, retain a customer than to acquire a customer, and I think we're entering a space where that is, no longer true. It used to be with, lifetime values kind of through the roof. The unit economics were, beautiful, for lack of a better term. And, as that starts to change, it's going to require a lot more investment to retain those customers because of all the, the new components, the new infrastructure, the new benefits that actually need to be built out, research built out, deployed. And then, training the entire field of producers on how to position and sell those benefits. So I think that statement is no longer true, where it's going to be a lot more, it is going to be more expensive to acquire customer if those lifetime values keep eroding and you're going to churn them. So the focus has to move towards, investment and retention.
Yeah, it's almost required now with the pressure on unit economics that there's innovation in our channel, and I think you're starting to see some of it, and there'll be more of it coming out. But
yeah, it's both sides of the coin too, right? Because I think the distributions feel a lot of that pain, but at the end of the day, it's not just distributors; it's the carriers. It's that partnership. They're in it together. That's right,
and I think the health plans recognize that. And they'll recognize it, even more as this becomes throughout the industry. So now bring us up to a little bit of the kind of sensitive topics.
Spicy topics.
The spicy topics. First, we'll talk about InsurTechs, which the question here is, well, the data point is they've kind of stumbled, right? Everyone thought InsurTech in the capital community was kind of a repeat of fintech, and it's kind of been a little bit more challenging than I think fintech has been. And so, the question is, given the public performance, where are we at in InsurTech? Is this the new reality? Is this just a little dip and it's going to come back up? Is there plenty of room for innovation still? These are all kind of questions everybody's asking, including the markets. But I'll start with you, Niji.
Yeah. So this has been a topic of conversation, that we've been talking about internally and with our customers for a long time now. I mean, it's, I think we've reached, first off, I think the public markets and really Wall Street didn't quite understand insurance businesses appropriately, and
Imagine that.
and they almost valued premium at like a SaaS multiple, which doesn't make a ton of sense. And I think starting out, the private valuations are a bit high. Public valuations were super high during those IPOs, and then this happened right kind of in the middle of this unprecedented boom in public and actually private market valuations. So it was a little bit of a perfect storm, but at the end of the day, a lot of insurtechs today are really digitizing paper forms, let's say, into a website, doing distribution instead of brick and mortar through SEO, SEM, integrated marketing campaigns. And so the focus was, I think, a little too solely focused on distribution and not so much everything that happens, outside of that. And I think this was just the first wave of insurtech. And, I see this second wave coming that's really going to be enabled by infrastructure plays, by actually improving each step in that value chain. If you think about, sales, marketing, coding, binding, compliance, claims, reinsurance, there's so many components that, for a tech company, for example, when we started AgentSync, we were able to just buy all these tools off the shelf. All this infrastructure was built. We had Salesforce. We had, Marketo for marketing automation. We had, even like Google Calendar and Zoom and Gmail. All these tools are out of the box, ready to go to be the core infrastructure for the company. That doesn't really exist in the insurance space. There's not really great infrastructure tools that have a ton of competition that drives that quality up. And so I think the future is going to be these step changes and really commoditizing core pieces of infrastructure that, over the next 5-10 years, next wave of kind of insurtech entrepreneurs are going to come around and stitch these tools all together to be able to drive insane efficiencies versus having to literally reinvent the wheel. When you start a new insurance company or a new MGA or a new distributor, you have to build a lot of these core processes yourself. And you have an internal dev team that's literally coding out policy admin and, like a broker management solution and, AMS, you name it. So this next wave, I think, is going to be a lot more interesting because it's going to be driven by both efficiency and innovation.
Yeah, so I think your point there, which is I think right on, which is there's a lot of opportunity still in InsurTech. The industry, especially the health and insurance industry, has been very slow to adopt, and I kind of remember the transformation of the banking industry, and it's like seeing that all over again, right? Where everything was paper, and then they kind of finally, kicking and screaming, ran into the digital age. David, anything to add to that? Anything different point of view, maybe?
No, I think our vantage point is somewhat unique because we had to go out and raise a bunch of venture capital dollars, and fortunately we did some of that last year, and if you're looking to do that this year, good luck. Unless you have really strong unit economics, I think there's just going to be a very elevated level of due diligence around the integrity of your financials and the unit economics of your business, that there's not going to be a free pass on just having big revenues. We learned the hard way, and I think that a lot of other people are going to learn the hard way, and I think it just comes down to, fundamentally, can your business make money? And
Yeah, I think it's a great point, right? It doesn't matter if you're privately owned, and we're privately owned. We were public. We got taken off, thank goodness, we got taken off the public markets. And I will tell you, the questions we get, and I'm sure you guys are experiencing the same, is all from that public company valuations perspective from the lenders and partners. So it hurts everybody in the industry when that happens. So I guess that'll segue nicely into, what's your take on these, gross write-downs of the public? I call it the broker channel or distribution channel. I don't want to name companies, but everyone's familiar with them, I think. And they've taken a hit, and that impacts all of us, right? So, is your view that that's kind of just a pure reflection of LTVs, or is the entire business model? And is it just transitory and everybody will work out of it sooner or later? And I'll start with you, Dave.
Yeah, I mean, I think you've seen it across more industries than just insurtech, but if you're spending $10 to get $9 back, well, your stock's going to be put in the trash. And whether it's Bird, the scooter company, or some of the players that we know in our space, I mean, that's happened, and that's going to continue to be the prevailing thesis. Is having positive unit economics is the cure.
And doesn't that kind of also just indicate why some of these added services need to get monetized, right, to help drive kind of the revenue model? I think that's an opportunity for all of us. But yeah, anything to add there, Niji, on the specifically on whether these public companies have a way out of it?
Yeah, I think what's really unfortunate is some of these companies are great companies that are doing really well. And I think just they're being swept up with, into this kind of cohort or class of insurtechs. And, I think it's just how you can't judge the success of a company on public market valuations. And it's great when they're high.
Tell the lenders that.
Yeah, but I think it's going to be a little bit of time until things correct themselves in the right way. And, unfortunately, great companies are still just going to get punched in the face in the public markets until things kind of level off in the next year or two.
Yeah, so that's, doesn't seem like we have time for questions, so I apologize for that. But I want to thank you, gentlemen, for excellent insights and views on what's going on in our industry. So thank you.
Yeah, thanks, Domenick.